Welcome back to another video, and as always, if you're new to the channel, a sub would be really appreciated as I do provide valuable content on a daily basis. And if you enjoyed the video, please smash the like button for the YouTube algorithm and let me know in the comments below exactly what it is that you would like for me to cover in my next video. So today we're going to take a look at the Usdcad as requested by Mr. Kotso M. I'll give you guys a full overview of what we have here from a technical, fundamental, order flow and sentiment perspective as well. Now starting here on the monthly time frame, we can see how the market had just broken below this level of resistance that was turned support. So we can also see, if we look left, this level over here acted as support. The market came back, tested as resistance, broke above, back, became support. Support did not hold. The market melted straight down through that level as well. Now excuse me, now here on the weekly time frame, what do we have over here? Now we can see how the market printed this structural level in the market, how the market printed that structure over there as well. So we can definitely expect a short-term pullback in the market before the continuation. And if you look left, you can see the market is also testing this structural level as well, and the market is somehow printing this inverted head and shoulders from a weekly perspective as well. Now here on the daily time frame, what do we have over here? Now we can see this was a very strong level of support. Support got broken, and once support gets broken, it then becomes resistance. The market was also printing this double top over there, and after an impulse you expect a correction, and the best way to measure that is by taking your Fibonacci from the high to the low of the impulse, and you can see how we've got the last Fibonacci level, well, between the 61.8 and the 78.6 lining up with structure over there as well. So we can definitely expect the US dollar to go up in the short term, but the overall momentum will still remain bearish up until, if the market comes to this level or breaks above that, then you can expect the market to continuation. So for now, we can expect a pullback to that level as well. Now looking at the COT data, so the commitment of traders, so what the big banks, hedge funds and institutions are doing in the market. Now based off the last report, or the previous report that was published on the 28th, you can see how hedge funds came in and they closed minus 3.397k longs. We can also see how they came in and they closed 2.940 short positions. So long positions refer to buying and short positions refer to selling, and we can see how the overall net positions is sitting at 42k and the short positions are sitting at 52k. Now if you look at the most recent report, what do I have over here? You can see how the hedge funds came in and they continued to and this was last week's report. They came in, they closed another minus 623 longs, and they also closed, they added plus 68 long shorts. Now we can see how the overall net positions, there's still more sellers in the market than there are buyers. So the short term, the buying opportunity on the USD is quite expected as well. Now we're not going to look at the data for the USD because all currencies traded on the spot trades against the USD. So when you do look at data for the Canadian dollar, you're actually looking at the USD CAD or the CAD USD, because like I said, all currencies that trades on the spot trades against the euro. Trades against the USD. Now looking at the sentiment data. Now the sentiment data tells us exactly what retail traders are doing in the market. Now you can see how 89% of retail traders are long and how 11% of retail traders are short. Now this data was published on Monday, and we can obviously see why there was a massive sell-off as well, because they obviously needed to grab that liquidity first for the buy to the upside. So a lot of retail traders probably panic closed their positions as this level of support got broken, and they thought that there was no pullback, and especially after this candle closed, because after the market break a level of support, you expect the pullback for the resistance before the continuation. And as retail traders, that is exactly how we think. So retail traders probably came in and they started panic closing. Some people probably came in and they said, you know what, we have the structure in here, so we're probably going to get that pullback. And the market said, no, we want to continue further down first before we continue to the upside. So overall, we can see that in the short term, we can expect the US dollar to get stronger. Also, if you look at the latest CPI data that got released today, so the previous was sitting at 0.8%. The actual came out lower than expected. Lower than the forecast. It was higher than the forecast at 0.5%, which was good to see. The previous was 0.5, the forecast was 0.5, and the actual also came out at 0.6% as well, which was good to see, which further adds to the fact that we can definitely see the US dollar in the short term get stronger. However, one thing that we do need to keep in mind also is that interest rate hikes are coming, so we could potentially see the market go right through that level, then pull back, then continue higher. I've been doing so, the market would print this inverted head and shoulders from a daily perspective. We will have this level of resistance then broken, or the level of support that got broken would then be resistance. Resistance will get broken and turn support, and you can definitely expect the market to continue higher from there as well. Now guys, that's all from my side. If you enjoyed the video, please smash the like button, and thank you for your time. Have a good day, and as always, cheers for ears.